I never really thought that I would specialize in real estate.
And as a kid growing up, what kind of kid were you?
I would say I was a nerd very much up until I was 12 to 13 years old. Don't lose money is the first thing. That's the first rule. Do not lose money. I was also at the juncture of my career where I could take that sort of role on. Now you're doing all sorts of interesting things, but a couple of years time, do you think about things where, if you didn't do something, would that bother you? If you didn't achieve that in life, or at least try to achieve that in life? Geez, it's a very deep question. I didn't expect that at all from someone who's trying to hire me. And once you identify those fact patterns, then you can also, what I call, how has the movie played out elsewhere? Is there a thematic here that we should be investing in rather than being too asset specific? When you're a good investor, it's not 100% necessary for you and you alone to understand every single thing that's going about in an industry.
Do you think as an investor, it is an efficient use of your time to give up 2 whole days a year to go and be a receptionist?
Yes.
And put on the cinch jersey?
Yeah. So,
and do you think it makes you a better investor because of that?
So,
can you tell me a little bit about Clear Sky Capital?
Clear Sky Capital was...
Iyngaran, welcome to the People Property Place podcast.
Thank you.
Not at all. Well, look, I'm so excited to unpack your journey and your story, and we'll come a little bit later in the conversation onto Clear Sky Capital. But to kick us off, can you just tell me a little bit about your background and story?
Yeah, sounds good. Well, I guess I would like to think that just looking at the podcast so far, it feels like I'm a little different from your usual participant. I'm Malaysian by background, or Malaysian Indian rather. My parents, they are perhaps some are second and some are third generation immigrants to Malaysia. The British brought us over to tap rubber a very, very long time ago. So my dad was the son of a single mother with 10 siblings in a rubber estate. God knows how he got to where he was. My mom is a professor at a Malaysian university. She was the head of forest genetics in that particular university, and she came from a family of a bunch of other Sri Lankans who came over, and her father was a teacher. So that's sort of like the basics. So again, I was in Malaysia the whole way through, very much middle class, etc. Maybe found a little bit of wealth towards the end. I didn't even know that I was supposed to come to the UK. I went to a boarding school where everyone went to Australia, but for whatever reason, it was a British boarding school, and the sixth form teacher then said, well, actually your academics aren't too bad. Why don't you try, do A levels and apply here? So I got to the London School of Economics over here.
So you were in Malaysia, grew up in Malaysia, went to a boarding school in Malaysia, which is a British boarding school.
That's right.
The expectation normally is for people to leave that school and go to Australia to kind of pursue careers.
Yes.
But given your academic prowess, your teacher said, hey, you should go to...
Why not try the UK?
Why not try the UK and
Exactly.
go to LSE?
Yeah. So I ended up here, and it's the first time I've ever stepped foot in London. This was probably when I was 17 years old. I had no clue of what was going on. You join LSE. This was 2006, very much investment banking boot camp. All the bankers were making great sums of money, etc. But I graduated in 2009, so that was an interesting spot where
from LSE.
Yeah, from LSE, I had an internship with one of the investment banks that I won't name, but people were getting fired as I was writing pitch books and so on and so forth. So that was interesting. It was my first introduction to what a banker's box would look like. But in 2009, I managed to secure a job with Ernst & Young in their restructuring team. So again, as I was growing up, it was a lot of how to limit the losses that you've got. So lots of restructuring rather than your usual M&A type candidate. So when I joined, the good news is in 2009, I had lots of live transaction experience. So I worked across deals such as elderly care homes, a bunch of car parks, student accommodation with certain media businesses. There were holiday There were sort of holiday booking businesses. I'm purposely not mentioning the names because I'm not really sure whether I'm supposed to or not. But what that meant was, as a young kid, you had lots and lots of real life transaction experience. I basically never pitched. And then from there, I took all of that and then joined Greenhill, where I ended up doing more execution, which was absolutely amazing. And in 2013, I then ended up joining Macquarie's Principal Finance team, where we were investing the bank's balance sheet. And that's frankly where I really learned how to be an investor.
So before we get on to that, am I right in saying you studied accounting and finance at LSE?
Yes, that's right.
And did you always want to go down the kind of the finance route?
You know what? When I was growing up, so my dad was the head of commercial banking for one of the Malaysian banks out there, and then he became an entrepreneur. In Malaysia, you don't say whether you're an investor or you're an entrepreneur. You just had a blanket line saying you're a businessman. So that's what I wanted to be. I thought it was cool to get involved in business, but as I was here, where everything is a lot more institutionalized, it then became very obvious to me, at least very, very early on, that I wanted to be an investor. I thought that being an advisor initially was incredible in terms of trying to figure out what makes a business tick. But I was pretty set on becoming an investor as soon as I possibly could.
And as a kid growing up, what kind of kid were you?
100% a nerd to begin with. And I would say I was, it'd be interesting I'm probably going to get a bunch of calls when this thing airs, but I would say I was a nerd very much up until I was 12 to 13 years old. That was also the point where I went to this particular boarding school and I was forced to pick sports and run, and it was great. You played rugby and football and badminton, volleyball, whatever you want to play. They had a pitch for it. And I think that made me into a better all-rounder. And then at that point, I think I became a lot more, I would say, self-reliant on myself. So it was not only about academics, but also how do you behave and, frankly, work together in a team concept. Yeah.
Was that kind of drummed into you, the academics, from a very young age?
Apparently not. I mean, I go through this thing with my daughter, and I'm sure all parents would appreciate this. My wife and I talk about it all the time. I don't think our parents pushed us very much. We just sort of did it because we thought it was the right thing to do. But now you tend to push your kids a whole lot more just to make sure they're on the right path. But sorry, long-winded way of saying no. I think what helped me was influence. So I had one particular friend who we had a very friendly, extremely friendly competition with each other. And what I mean is, when we worked together, if I found something, we are talking year 2, year 3 now, by the way. If I found something that he didn't know, I would rush to go tell him, and he would do the same. And I was either the number 1 or number 2 in class. It's just me and him. So I think that really helps influence when you're younger.
So clearly you could apply yourself very strongly, and you succeeded in an academic context, and then kind of got a more well-rounded experience when you moved to boarding school.
Yeah.
Because your dad was in banking, you wanted to be an investor. Did you want to follow in your dad's footsteps, or did you kind of want to shy away from that and forge your own path?
So it wasn't the part of his career where he was a banker. Probably is not what interests me. Is what he did after, where he became a bit more of an entrepreneur. So like everyone else, there were a few different businesses that he was involved in, including, and it just happened to be property. So we've kind of developed shopping malls and apartment blocks, so on and so forth. But it is the run-of-the-mill, very, very easy, build something and sell it block by block. The numbers still sort of worked in Malaysia at that point.
So you, just picking the story back up, you, midst of the global financial crisis, you graduated from LSE and then found yourself at EY.
Yep.
You did your accountancy. exams?
Yes, I did. Yeah, so I primarily did. I primarily did restructuring, and lots of complicated modeling, etc. But as part of that program, they make you do the chartered accountancy. To be honest, it was super plush. Like they gave you time off. You just focus, got the exams done, moved on. So it was a great place and a great training ground to be in.
And it gave you some good broad cross-sector experience as well.
Yes.
So post EY, you moved to Greenhill & Co. Can you just tell me what you did there for a year?
Yeah. So over there, it was a mix between a little bit of M&A and still lots of restructuring. So the two big ones that I did, there was one where we acted for a publicly listed company to help with some redress payments that they had as part of some of the products that they sold. And then the second one was a private equity buyout of a fairly large chemical distribution business. And we did an amend and extend of the debt that was there. And I thought that was pretty cool in the sense that it wasn't a big team, but you had to corral lots of stakeholders through a particular door, which is the door that they're supposed to take. I haven't really followed the business, but at least I know for the debt holders that were there at the time, they all got paid par. It has since bought by two different buyout companies, and I'm pretty sure would have made good multiples for the people who have invested in it.
And was it at Green & Hill that you got some exposure to real estate?
No. So so I'm just going to skip into Macquarie a little bit. So at EY, a little bit of real estate. Greenhill, zero real estate. The early years at Macquarie were virtually zero real estate. So we were investing in online classifieds businesses. We had industrial businesses. We did look at a bunch of elderly care homes and learning disability care homes. We did lots of distressed residential mortgages. We did aviation portfolios. We did toll road portfolios. We did some, I'm trying to get to real estate. So we looked at nursery groups. We looked at school groups. So an incredible training ground. But it was only, I would say, 2016, 2017 onwards where I started looking at traditional real estate. What I mean by that is we looked at a bunch of office buildings, some residential buildings, and then later on in my career, we focused a bit more on logistics, and we were there, to be honest, at the golden time, sort of 2020 to 2021. It was a 2-year ferocious period where we rolled up lots and lots of logistics and sold it to a very large private equity company.
We'll come back to that.
Yeah.
Because I'm keen to hear it.
Yeah.
But why did so moving from Greenhill to Macquarie, was that your kind of route to go from an advisor to doing principal investment?
Yes.
And that kind of closed the loop in terms of what you wanted
That's right.
to set out to do.
That's right.
But it was just because of the global financial crisis, you kind of went on this journey of EY, getting qualified in a job, getting some good transactional broad experience, to kind of refine and work out what you wanted to do. But actually, the timing allowed you to make that move to Macquarie to fulfill your initial goal of being an investor.
So you hit the nail on the head there. And also then, why Macquarie?
And how did that come about?
Like anyone else, I got in touch with a recruiter, and the recruiter pointed me towards Macquarie. There were a few other firms that I was looking at, but I think really three main things caught my attention. Number one, Macquarie was very well capitalized at that point. The team, in my humble opinion, I think is one of the best teams I've ever been a part of, both from a technical ability perspective, from a thinking about things that actually matter and diligencing to not quite boil the ocean, but doing that. So it made you a very good investor. I wouldn't trade anything for the training that I've got over there. And the third thing was they were fairly flexible in what you wanted to do. So if you think about all the industries that I mentioned, we were participating in, it could be senior debt or pref or equity. It was a fairly broad range. And I think for me, at least at that time, it was important for me to gain all the experience that I possibly can across the capital stack, across all industries.
And across geographies as well.
And across geographies, that's right. So I've done, we've done deals as far as, never actually did one in Australia, but We've done one in New Zealand, I've done one in the US, and a bunch all across Europe. So fairly lucky.
And do you think that depth and breadth of experience makes you a better investor?
100%. So
Why?
I'm a big fan of, especially when you look at new and weird and wonderful things, you start identifying one or two things where, I mean, they're fact patterns really. And fact patterns can occur in many different industries, can also occur in real estate. And once you identify those fact patterns, then you can also, what I call, how has the movie played out elsewhere? You then gather the data from many different other countries to see whether that all conforms. And is there any reason why it shouldn't happen in this country? So that is a big piece of analysis that we tend to do, like really try to figure out, is there a thematic here that we should be investing in rather than being too asset specific that you then, what's the
Too siloed?
You forget the forest from the trees.
Yeah,
I'm not really sure if I've done that right. Yeah.
You missed the wood from the trees.
Wood from the trees, there you go. Yeah.
So, but is it not really challenging to be all over a whole host of industries, a whole host of sectors, and a whole host of geographies at any one time?
Yes. And like anything else, you tend to be an expert in the few things that you initially invest in. So I tended to be a little better when it came to online classifieds or German cable or distressed residential mortgages or real estate or nursery/school groups. The reality is, I think you need to balance between when you're a good investor, it's not 100% necessary for you and you alone to understand every single thing that's going about in an industry. What you should be very good at is hiring the right people. And that's not just, when I say hire, they could come in the form of a market report. It could come in the form of an expert call with the right people. It could come in the form of actually hiring someone to figure out what to do. But as an investor, I think it's incredibly important for you to analyze certain fact patterns and then backtest it with the various different due diligence items you can do, whether it's expert call providers or market reports, so on and so forth, to make sure that you are 90% right in where you're getting to. And once you do that, that is what you become very good at, as opposed to going to the nth detail on, like, I am extremely good at planning in like Brent Council. Like, that's helpful for just that one thing, but the reality is, as an investor, everything changes all the time.
So what are the skills that you were building through EY and Greenhill that set you up to be able to make that move from the advisory to the principal side?
Yeah. For me, at least, it's recognizing the fact patterns, as I was saying, and being able to clearly articulate them to figure out whether it's a good investment proposition or not. There was also extremely complicated modeling that I had to do at Ernst & Young. I mean, I think the most complicated thing that I had to do was, here's 200 entities of a particular group. The debt sort of sits there, but then there's a bunch of intercompany in various different places. There's circularity going on between different entities. But hey, if the assets of each entity was, say, X, and if we liquidated all of them, how much would the debt get? God, that was, just thinking about it gives me like heebie-jeebies. It was a lot
of late
time.
nights.
Yeah,
a lot of complex. So in terms of kind of the skill set, it was really understanding the nuance of a deal, how to appraise, underwrite, risk mitigate, but also
that's right.
Look at where you could drive value and upside as well.
So there's the technical bits, but I think the thing that I learned best is, how do you articulate something that's fairly complex and present it in a very simple way that a layman can understand? I think that was the most important thing that I've ever learned.
So you moved to Macquarie. How many rounds of interviews did you have?
So I thought it was 11, but my boss then told me, no, it was 13. The last two, even though it was at a drink at a bar, which I thought, I've got the job already. He then later told me, no, that was an interview too, because we needed to understand whether you would conform with our culture and, kind of our the way we socially interact. And I was like, oh, glad I passed.
after a couple of beers, just to see if.
Well, I think it was during the beers, and it was one of those things where I think you test both ways, right? I think a lot of people nowadays, especially on the junior end, it's all about how can I change myself completely to make sure that I fit the job. I mean, a job is the place that you go to, and you're going to spend the most amount of time anyway. So I highly encourage people to always also assess the other person across the desk. And for me, again, like I just think we had an incredible time. I think it was one of the best teams I've ever joined in my life.
So you worked across lots of different sectors, geographies, asset classes, doing a whole host of deals.
Yep.
Were you working off Macquarie's balance sheet, or were you working within a particular fund or
Balance
structure?
sheet. Which is interesting, by the way. I mean, I'm learning it now. Obviously, Clear Sky is fun. The balance sheet is it's your behavior is a true principle in itself. How, and it comes down to you don't quite think about, am I getting promote here? Am I not getting promote here? You work for every single dollar because that's your P&L. It's all balance sheet. It's like investing your own money.
So for someone listening to this, just in terms of the distinguishable parts of it, and it might seem really obvious to some, but others maybe not.
Yeah.
What is a balance sheet, and why is it so? Why is it so precious, and why do you have to have a slightly different mindset in comparison to a fund?
Yeah. Okay. I think the easiest way to think about it is this way. So say, for example, you have 5 different funds. This is how I suspect external investors think of it. There might be a scenario where maybe, Fund 1, 2, and 3 is going really well, and Fund 4 is not going so well, but your economics are bound by Fund 1, 2, and 3. And if Fund 4 doesn't do as well, maybe you don't get as much promote, so you don't spend as much time on it. Now, in reality, I don't know any fund investor that would do that, because the second you do that, that's it for you in all future funds. But on the balance sheet side, all of those 5 funds that I mentioned is all just commingled into one big balance sheet. So it's really just like it's like investing your own money.
It's like your own current account.
It's your own current account. You got, a bunch of expenses like staff and, regulatory costs, office compliance, so on and so forth. And on the revenue side, you got all your investment income. But it's all your investment income. So if you make a loss, that hits your P&L. There's no sort of, oh, it's okay, I don't need to think about that because that particular fund is not doing as well anymore. So you are, whether you're making a 1, 2, 3, or 50% IRR, you work for every single percentage point.
Does that mean that you have to be more mindful of risk and downside when you're investing the balance sheet rather than working on a fund basis?
Yeah. So my thinking, on that front, I'm probably old dog, new trick sort of situation where I don't know how to conform to the not looking at the downside. So I hate losing money. But yes, so at the bank, it was, pretty much the opposite of what people would do on a venture capital side. Don't lose money is the first thing. That's the first rule. Do not lose money. And I take that in our current funds too, because losing money, whilst, maybe the total return of the fund does well, when you're losing money and you're trying to recover that back, it's almost the same amount of effort / more effort than the one that you're winning on. So when you underwrite, you just got to underwrite pretty heavily to make sure that you're not ending up in a scenario where, or at least you're not easily ending up in a scenario where you're making a loss.
Because you were investing Macquarie's balance sheet, is that why you could be so flexible just
Yes.
in terms of the types of deals that you were doing?
That's right. So there was no, call it one LP basically. And that LP has seen your track record for a very, very long time and allows you to be fairly flexible in accordance to obviously the risk framework that they've got. But what that meant is you can be fairly flexible. If tomorrow you think the best thing to do is buy a bunch of distressed debt at 80 cents on the dollar, that's fine. If the next day it's time to roll up a bunch of logistics assets on the equity side, that's fine too. So it's fairly flexible.
And in terms of timeframes, you could be in and out, you could be longer term holds. It just really depends on
It really
the risk,
doesn't matter.
the risk profile and where the opportunity set is.
Yeah. So there are times at which, you might end up buying something, someone takes you out at par in like 4 months, normally more in a loan format. On equity side, you might be out in 2 years. Some things you hold till, I've seen some 7-8 years. So it's a wide mix.
So it was here where you kind of started to build up that kind of, you started spending more time on real estate deals.
That's right. Yeah. I never really thought that I would specialize in real estate, but
because
it's only because you did so many different things. I didn't even know what I was going to specialize in.
You just wanted to be an investor, capital allocator. That was your thing.
Yeah, that's what I cared about most. But in 2019, or rather at the end of 2019, we started becoming a bit more specialized on exactly what we do. And because I had done quite a lot of real estate before that, I ended up specializing in real estate. And then it was fresh in the sense that I didn't have baggage on, I only did office, or I only did student accommodation, or I only did resi. It was a bit easier for me to go back to my roots on, okay, where are the fact patterns? How has the movie played out elsewhere? If you're doing it fresh, which are the ones that we should focus on? And we ended up focusing on logistics, student accommodation, and residential for the most part.
So can you just talk to me about some of the real estate deals that you did at Macquarie? I know you kind of mentioned maybe a pan-euro.
Yeah, that's right. So one of the bigger ones that we did was between 2020 and 2021, we partnered up with a Singaporean private equity firm, and we rolled up, a fair amount, close to about 400 million euros worth of pan-European logistics. There's no development or anything like that. This was as simple as buying stuff that's already yielding at a reasonably high rate. It was already difficult to source at that point, by the way. So I was speaking to what I would call lots of bucket shop brokers, so on and so forth, who probably didn't quite know what they were selling / needed a bit more help. And I was willing to peel the onion and get that done. So between us, we managed to do that. We were thinking of whether we should be IPOing the business or doing a trade sale. Ended up doing a trade sale instead. So it was interesting. It was a very fast and ferocious roll up. I remember having a lot of site visits via camera because it was COVID, so I couldn't really travel. So we had to hire a lot of the valuers, a lot of the tech providers, valuers, LDD, so on and so forth. You do all of those things ordinarily, but to tick the box, and I always feel that when it comes to real estate, you got to do the site visit. It just feels weird when you don't. So we had to hire 1 or 2 people to literally go there with their, I had to FaceTime video them and, okay, this building actually exists. Could you go around here? Could you go around there and record the whole thing? So that was interesting.
Virtual site visits.
Completely
high tech, just FaceTime.
That's right, yeah.
What other real estate deals did you do at Macquarie?
We did a lot of, we had a lot of residential exposure. So some of it, again, is stabilized. Some of it might be inventory loans. We did a bunch of student accommodation. We did more logistics as well, particularly in Poland, which is a market that certainly I'm still very excited about. I would say that probably encompasses most of what we were up to. We we had another office asset in a difficult sub-market, but we managed to turn that into life sciences. And we got the planning for it and sold it off. So it's one of those deals where, remember how I said when it takes as much effort to make no profit when you have something that's not going so well. And so I think on that one, really making sure that we are better at getting the thematic right is probably a good thing to do.
A lesson on that particular.
Yeah, we got off all right, but it was
a lot of hard work.
It was a lot of hard
zero
work.
Return.
Yeah. But this is the thing, it sort of doesn't matter. It doesn't matter in the sense that every single dollar matters. Just because we don't have the optionality of, maybe this sits in a separate, SMA of some sort where I can just let that go and it won't really affect me on the other side. No. Every single dollar matters, whether you're making, 99% of the equity, 100% of the equity, or 150% of the equity. everything matters.
Were you involved with Ivanhoe Cambridge setting up PLP or backing that?
No, I wasn't. That was part of the funds group. So we were specifically Chinese walled away from that. So I didn't know very much at all of what was going on. And this is the PLP group.
Yeah, PLP. Yeah, exactly.
Yeah.
The logistics,
Yeah.
the logistics platform. So kind of internal Chinese walls, just because that was a separate fund that invested in that
That's
rather
exactly
than
right.
direct balance sheet.
Yeah, which happens a lot. I don't know whether it happens more frequently now, but in any good place, and I suspect it's the same, whether you're JP Morgan, Morgan Stanley, Goldman, Macquarie, it's all the same thing. There are certain times where these things do need to be appropriately Chinese walled away. And sometimes it can be a little embarrassing where, you end up bidding on the same thing. But, I think it's also good to keep the competitive tension alive, even if it's between two different teams in the same company.
Quick one from me. If you haven't already subscribed or followed this show on the podcast or app where you listen or watch, please do. It takes 10 seconds and helps tremendously. I've got really big plans for the People, Property, Place podcast, and that one small action really, really helps grow the show and the presence and enables us to keep doing what we're doing. So if you haven't already, please follow or like on the platform you watch or listen to. Thanks so much. Talk to me about Clear Sky Capital and why you decided to move away from Macquarie and move to Clear Sky.
So, like I said, Macquarie was an excellent spot. I really wasn't thinking of moving or anything like that. We got introduced. The CEO of Clear Sky is a guy called Marcus Cruchet, and Marcus and I got introduced by an investment professional that we know. And when he initially called, I had no idea I didn't know anything about Clear Sky. I looked on their website and went, wow, okay, the returns look pretty interesting. They come across as a set of very entrepreneurial people, but I didn't really know too much about them. And this was also a period where we had quite a few transactions going on in Macquarie. So my reply to him was, hey, let me help you find someone. I'm not really sure what this is about, but let me help you find someone.
So the initial premise was kind of connecting to kind of talk real estate, but also
talk real estate / it was an odd it was such a odd experience, because most people who call you saying, oh, would you like to be head of Europe, it's a very, what have you done in the past? What's your experience? What's your transactions list look like? And which are the LPs that you'll go for? We had none of that. The only thing that we spoke about was, what do you want to do with your life?
So Marcus said that to you?
Yeah. He's like,
connected to you and
straight
what
away.
Do you want to do with your life?
Yeah. Well, not quite like that. He was
Tell me.
It was more along the lines of, it's great that this person has introduced you. He obviously thinks pretty highly of you. I did ask for someone who is entrepreneurial but yet institutional. Great that we've met. And at which point I said, yeah, let me try find you the right person. We then met again. I always remember this. There's a Pret very close to the Waterloo roundabout. And we sat there and we were just going through, and he was doing site visits at the time when he was buying a couple of self-storage assets over here. And we just sat down and went, what do you want to do with your life? It seems like you've got a great gig now. You're doing all sorts of interesting things, but a couple of years' time, do you think about things where, if you didn't do something, would that bother you? If you didn't achieve that in life, or at least try to achieve that in life? Geez, it's a very deep question. I didn't expect that at all from someone who's trying to hire me. So we parked that, and as I, at that point, it was a very busy period. As I had a little bit more time and had my head above the water, it's at that point where I really started thinking about that question. And I thought to myself, look, the position actually seems pretty interesting now. It's building a business from not quite scratch, because they already had a bunch of assets over here. You're working with a bunch of good entrepreneurial people in America, and I thought, well, if I'm going to give this a go, might as well give it a go now rather than wait for 4 or 5 more years, and then for sure you're not thinking about this stuff anymore. So I think it's a sort of nice coincidence where he was looking for someone at that point, and I was also at the juncture of my career where I could take that sort of role on.
And I guess at this stage, November 23, or just beforehand maybe, you'd been at Macquarie for 10 years, you'd been working for 14 years.
Yeah.
Married, and I know you've got a daughter as well.
That's right, yeah.
It was a case of you've been head down, just working, trying to do deals and accumulate skills. It was your time to kind of take a bit of a step back and reflect and think about what the next chapter looked like.
Yeah, that's right.
So they had assets on the ground in the UK, and the team were kind of coming back and forth from the US to try and manage and kind of acquire further stock. What they actually wanted is they actually wanted someone to be over here physically.
Yes.
To kind of quarterback the UK and European operations.
Exactly right. Yeah, we did have a couple of guys over here already, and like I mentioned, we're now nicely vertically integrated with them. Where we had, I think, it's really the Clear Sky DNA. We got into business initially with people who are hungry, entrepreneurial, and happen to the world. And that's sort of the MO. So we probably purchased our first property late 2020. We're now end of 2024, call it, and we're at 24 stores. I think that makes us one of the fastest growing self-storage platforms in the UK.
So the thesis of Clear Sky, as a business, it's platform orientated, right? So it's like multifamily, modular, and self-storage.
Yes.
It was a self-storage platform that they wanted to build out in the UK and Europe first. So you've come from Macquarie, where you've been all sectors, all geographies, all risk return profiles, all things, balance sheet investing, to being a very specific niche sector within real estate.
Yeah. Which I didn't really mind, because the one thing that I realized was, again, going back to recognizing the fact patterns, getting to a spot where you have a rising tide, and a rising tide does indeed, kind of float more ships. If you look at how the movie has played out in every other country, whether that's the US, Australia, Canada, etc., that movie is just starting to get played over here. So we're probably 10 to 15 years, at least 15 years compared to where the US would have been. So the rough metric is the US has 10 self-storage square feet per capita. The UK has, I think it was 0.8 or 0.9. So roughly 10% of what it was. You are able to do this in every single sub-market with the exact same analysis, and every single time we followed not quite our rules. I mean, that's not the only KPI. We look at a bunch of other KPIs. Our assets seem to ramp up quite well. So I would say the UK is in a nice spot where you're not totally stabbing in the dark, because that can be scary, but you're not in a space where it's so mature. It's very much still nascent. You can still get, and I can be very data hungry, so you can still get all the data in terms of, we have a lot of proprietary data, obviously, having the assets that we do. So I can see what ramp up profiles would look like. I know what rent comps would look like. I would know business rates from one street to another street to another street. I would be able to accurately tell you exactly what that will come out at. I will know exactly how much staff costs I would need. I have some economies of scale on the marketing and advertising and so on and so forth. And more importantly, I think we've just we're now just integrated with such a great team. Like-minded professionals who are young, hungry, and just wanting to, make a name for themselves, which is amazing.
So that's Cinch Self-Storage.
That's Cinch Self-Storage, yeah, that's right.
So had Clear Sky and Cinch already started working together before you joined the business?
Yes. So they first started in 2020. That's when we started working together. And it's gone tremendously well. So, and all of us are learning from our. There's always sort of like initial mistakes, but the point of making a mistake is you got to learn from it. Otherwise, there's no point making the mistake. But we've got great group of people in there. You've got all of them are professionals. So one CFA, like the top guys in there, one CFA qualified, the other guy has a chartered accountancy, and another person also worked in the city. But I think, at least more than me, I sort of like envy them a little bit, where they took on this sort of the role where you can only count on yourself much earlier on in their lives. I came a little later.
So in terms of going on that entrepreneurial journey to kind of like leave and set up the platform,
that's right,
that they have done.
Yeah. Yeah.
And am I, self-storage, logistics, living, data centers of sorts, but specifically like the niche or the part of logistics that is very flavor of the month is self-storage, because it's operationally intensive.
Yeah.
But it's very granular and it's very hard work to kind of amass a portfolio.
Yes.
And quite a few people are trying to do it. What's your angle, or what's your edge?
Yeah.
And how do you see your ability in order to kind of like fast track that J curve to outperform?
So we did sort of do this a little bit with the logistics roll up. We were buying properties at 40 million at a go. So that's not new for us. But the difference here is self-storage as a kit. You got to make it. Remember how we started at 0.9, US is 10. So if you think you're going to go out and buy lots of operational self-storage assets, like I don't know, like there are only certain few people who have the low cost of capital to go and do that, because these things are highly priced. So you have to do all sorts of things from, we try not to do like a crazy amount of it, but always we got to have that, we have to take that risk on from time to time. So lots of planning risk, or subject to planning risk, or turnkey deals, or conversion deals, or sometimes you are lucky enough to take over an existing project and then put your spruce and value add on it. But I think about it like this. You are right. It does take, it is granular. There's lots of work in terms of leasing up and so on and so forth, and planning, etc. But I would argue that we've made a very good conveyor belt now. And as you push stuff through in that conveyor belt, where it is quickly evaluating where a certain spot works or not, and then, liaising with the right QS and planning consultant and general contractor, so on and so forth, to make sure we got the CapEx right. And then monitoring the build out thereafter. And then once it's coming near to fruition, you're kicking on the marketing to make sure that the stuff is there, the online presence there, your Google searches and so on and so forth, that's all there. And then once it's all stabilizing, then you're trying to figure out whether you can use dynamic pricing capability to make sure that you get the best yields. It seems complicated, but when you've done it 24 times, it's much easier to just push things down that conveyor belt. So I like the fact that it's granular, because it pretty much means if you are a very, very large shop, your return on effort on doing these sort of things probably doesn't make quite like too much sense because of the amount of capital that you've got. But if you're more like a mid-sized private equity firm like ours, where you can develop these things to a high single-digit yield, makes all the sense in the world to do that and continue using that conveyor belt to create good assets.
Because you're virtually integrated, you can kind of set the process, the system, and then you can be very clear in terms of what you're looking for.
That's right.
And then once you've identified, locked onto it, you can just push it through the process super quickly and turn a really high quality product around in no time.
Yes. And I'm happy for people to go mystery shop every single one of my assets. I think it's a good product. I try to do this twice a year, where the last time around I like spending time in a shop that's leasing up, and I think the guys have done just an excellent job. I mean, when I was sitting there, my biggest fear, by the way, was I was threatened by Rich, so Richard Owen, that he might mystery shop me and have a score on me. I hope he didn't do it.
So just to be clear, for people just trying to square this circle.
Yes.
Twice a year, you go and you work in store
As a receptionist.
as a receptionist.
Yes.
And a couple of weeks ago on LinkedIn,
Yes.
you pushed out a couple of photos of you
Yeah.
wearing the cinch, high vis jacket, sat there
Yes.
doing your receptionist work.
Yeah.
That's kind of what we're talking about now. So
Yeah,
twice a
exactly.
year, you'll go and actually give up a day or so and go and work
Exactly.
in store.
Yeah.
And
So-
why do you do that?
So I do that really to understand what's happening from a day-to-day perspective in the store. So I was, again, we had our ops director around at that point, and we were doing a walk around. So it was myself, Rich was there, we had the ops director, we had the area manager and the store manager. And we walked around going through things like, who's in this particular unit over here. We had I'm trying to not use names. We had a very large multinational telco conglomerate who was renting out a couple of 100 square feet to store their marketing materials. We had and in the store right beside, we had a production engineer for concerts. So all those Gibson guitars, all those Marshall speakers, etc. Those were all stored in there. So it's wide ranging on some of the stuff that you get. So we went through all of that. We talked about how we're leasing up. We talked about what else can we do to enhance our presence in the community in that particular area. We even went through certain bits where the store manager is going, hey, on our Cinch self-storage signboard over here, there's some water retention going on. Can we please drill some holes such that we don't have a maintenance issue going forward? So we did all of that, which is amazing. They then left. Then it was just me sitting together with the assistant, with the store manager and the assistant store manager. The idea is I'm the sort of lowest ranking person over there. I was lucky enough to see a bunch of reservations. I saw a bunch of move-ins that happened at that time around. And the one thing that I thought was amazing, and I'm not really sure how the store manager and the assistant store manager knows how to do this. Every single person that came in, if it was a customer, the guy knew his name. And we have like 200 people in that shop. We have like 200 different customers. Every single person he knew. So when you think about marketing in self-storage, especially in a spot where it's just so nascent, I think you got to understand people who come to you. I'm not talking about businesses. So businesses are very different in the sense that they know exactly what they want, right? They're storing their stuff. They maybe want 24/7.
The Gibson guitars, the Marshall
Yeah.
speakers, the B2B. You're
Yeah.
talking about the B2C,
Yeah.
and the people who might be moving house that just need a couple of weeks just
That's
to kind
right,
of like keep
yeah.
their sofa.
That's right. So,
dry.
but if you think about B2C, the consumers are using self-storage because they've had a life event happen.
It's like death, divorce, debt.
Exactly. Death, divorce, debt, but whatever you want to call it, it's a stressful time for them to move. And I see the way our receptionists, like how good they are in just managing that. Sometimes I think people you do what we do, you tend to be a bit cold about it sometimes, but they were just excellent at first, like just really caring for the customer. And that's something that you don't see very often, especially when you live in a place like London. Everyone's just very cold, having their AirPods on, just walking around. Well, it's here, people, the guy or the two guys said, they genuinely cared for the customer, which was great to see. I thought it was amazing for me.
Do you think as an investor, it is an efficient use of your time to give up 2 whole days a year to go and be a receptionist
Yes.
and put on the Cinch jersey?
Yeah. So
And do you think it makes you a better investor because of that?
So I typically don't like to go to stabilized stores because there's not much action. I want to go to the leased up stores. And although I would like to say that, I'm there 24/7, the reality is, let's be fair, my iPhone keeps ringing and I have to plug in my laptop to sign off on the next, it could be a utilization request or the next bid that we're going to do, or, making sure the IC paper looks the way it should. I just found that being there just twice a year helps me from meeting all our employees just to make sure that, I am there with them. And secondly, it's not just about the data that pops up on how we are leasing things up. It really does matter on different marketing strategies that hopefully now I'm able to then say, well, actually on this new store, have you guys gone to the business community group that's around the corner? Or have you, for example, the particular one that I went to, they had a community football field that was smack dab in the middle, and then they also built up like a container where they keep the jerseys and so on and so forth. Spending £200 and putting your Cinch self-storage plastered all over it is just many returns on effort. So I think it's very important to get that granular, but I think for my purpose, I think twice a year is good enough.
Can you tell me a little bit about Clear Sky Capital? Who are they? Where are they based?
Yes.
How long's the business been going?
Yeah.
Just because the name over here in the UK and Europe isn't necessarily as well known as others.
Sure. So Clear Sky Capital was founded by Marcus Crochet. It was founded in 2009/2010. He's Canadian. Came over. He likes to say, he's an immigrant, same way I am. And he started off doing lots of US multifamily to begin with. And as he progressed, moving to more adjacent sectors, he ended up doing manufactured housing. Manufactured housing in the US, over here, it tends to be a bit more of a retirement product. Whereas over there, it's really affordable housing. Like you can buy one of these homes for $75,000, for example.
Is it like modular?
Yeah.
It's like pre-packed.
Yeah. Think of it as
IKEA type.
That's right. So think of it as you have a piece of land, you do all the civil engineering, you got your roads, etc. You got the utilities in, and then you have pads, and people literally just install the container on the pad, and that's it. So it's very affordable housing. You can buy one of those things for $75,000, probably get $50,000 worth of debt on it. So it's only $25,000 deposit. And because of how it is, it's mainly you want to be in more temperate cities. And so that's a business that's gone pretty well for us. And we started doing US self-storage close to about 12 years ago. And that's where we've learned all the best practice over there. And the reason why we ended up over here is because, like everybody else, I'm sure everyone uses Green Street. And so Marcus initially looked at the Green Street reports going like, hey, it's kind of weird that the UK, for someone that's so developed, for a country that's so developed, just doesn't have much self-storage exposure. So at that time, he sent one of the Clear Sky guys down here to speak to a bunch of different people. At that time, the Self-Storage Association was already formed. And he, kind of came back, and Marcus would tell you that, yeah, it's like US 15 years ago, we should definitely invest here. But when you first invest here, unlike the US, where you can buy a building and have anyone property manage it for you, so you can have sure store, you can have extra space, so on and so forth, quite easily manage it for you. I would almost say it's almost akin to finding a lettings agent for your residential property. In the UK, it's extremely difficult. There are a few people who would do it, but some of them might be very, very good at the property management / marketing part. Some people might be much better at the development part, but you didn't have someone that was, truly together. And the story goes, we at that time, the Clear Sky guy that came down here is a guy called John Stevenson. John met with Joshua Nemo and Richard Owen. So those are the co-founders of Cinch, and off we went.
That was it.
That was it.
The kind of the kind of initial meeting that has helped build up to the 24 units that you have over here.
Exactly.
In the UK.
Exactly. And when because we've done it for so long in the US, we gave some best practice in terms of what softwares to use, so on and so forth. But Josh and Rich, I think, were also incredibly good at institutionalizing. I mean, we've learned from them too. It wasn't just a one way ticket. But again, because I found that they were very entrepreneurial, hungry, so on and so forth, they did things in a very efficient way, a very technology enabled way, just to make sure that they got the most return on effort.
Talk to me about the team that you've built over here in the UK.
So over here, I mean, we're still growing. By mid next year, we would have In total, again, vertically integrated, we would have close to about 24 employees. And that stretches from investment professionals, kind of head of finance, head of operations, head of development, a bunch of development managers, project managers. You've then also got in the Cinch team, you got a bunch of people in doing things like HR, compliance, marketing, and then if you think about the type our structures in terms of the reporting that we do, it's pretty intense. I mean, we've got listed structures, so every quarter, quarterly filings have to go out 60 days post quarter end dates. We've got proper audits that we need to do. And then if you think about the amount of stuff that we're developing, that also takes a lot of time. Like all the QS certificates, so on and so forth. They're just a development pack that needs to go together to do a drawdown every time. I sign a lot of these things, but there's a big team that's behind us that pulls it all together to make it all work, i.e. the conveyor belt.
And so in terms of the capital then, it's kind of North American kind of capital that is funneled through into the UK and Europe,
that's right.
Just purposely focused on self-storage.
That's correct. It's all Canadian capital, but that's our main LP right now.
And is it in a fund structure and you've got to kind of return it within a 3-5 year PE cycle, or is it more of an evergreen?
No,
structure?
It's in a fund cycle. Unfortunately, we're not big enough to start doing, sort of evergreen sort of structures, but no, this is a classic fund cycle. Yeah.
And at the moment, the portfolio is UK focused.
Yes.
But the plan is to kind of take that across
Yes.
Europe and
So
build on that as well.
Yeah, we absolutely want to go pan-European, but also really balancing that, balancing between it being nascent / we want a little bit there. So I don't necessarily want to stab in the dark immediately. There are a couple of cities that we've identified and people in there that we would like to hire, which has similar characteristics, such as we find that if your road systems are too good, so places like, say, Germany or Sweden, so on and so forth, people like a different type of storage. Whereas if you're in a city that's very urbanized like the UK, where you have certain city spots, that probably works better for us. And then it's all about managing the self-storage per capita as you go along and not going into a place that's just oversupplied. And balancing all of that is also, how does the town council or the local council, how does planning exactly work, or building controls when you get one of these things done?
What's your take on the wider real estate market today as we sit here towards the end of November 2024?
Yeah. I think it's just similar to other things, right? Some industries have very good themes behind them. So for example, logistics is still doing reasonably well, but there's some chat around, the occupier market isn't as great, and they're not seeing as much lease up happening. But overall, I think if you look at the primary factor of e-commerce as a percentage of sales, it's still sort of ticking up. It's not like it's going off a cliff. Living generally seems to be doing pretty well. Again, you could look at student accommodation and go, international students didn't come in a big way, but you've got to take a longer term theme, especially when you buy, a longer term stance when you're buying real estate. You can't trade in and out of these things in 1 or 2 years. Office, I think it's tougher, but I think it's tougher in certain submarkets. So I think if you're in Mayfair, Fitzrovia, etc., place, like where we are, I mean, let's be fair, I try to find office space because our team is expanding, is really hard. It's really, really hard. And nowadays people want things that are totally amenitized, etc. It's very difficult to find the right building. But I think if you're trying to lease up, in certain submarkets where you're trying to lease up 150, 250,000 square foot at a time to a particular tenant, that's a little harder. So I tend not to focus too much on what other people are doing, but more about which is a sector that I want to take a nice concentrated focused bet on. Self-storage is one of them, and we've identified 1 or 2 later as we develop. That's where I see things going. Again, if you have a rising tide, depending on where rates are, so on and so forth, it should really lift all boats.
So you back the thematics rather than try and be contrarian and go against it to try and drive alpha?
I've never been very good at contrarian is one thing. I've some people say catch a falling knife or picking pennies in front of a steamroller. I've never been as good as an investor. I'm not saying it's right or wrong, but I've never been as good doing those sort of deals. I much prefer are the themes good? Is the macro tailwinds behind it good? Let's go for that instead.
How easy is real estate in comparison to other sectors that you've invested in beforehand?
So real estate is interesting in the sense that it's the one thing that you can diligence on an asset-specific thing to death. So what I mean by that is, say for example, you go and buy a operating company, just a standard operating company. Let's say you are buying, say you're buying an online classifieds business. Most of the time, if you're thinking about the print to online shift, you're then thinking about how fast are they increasing pricing, but you never really know to the nth degree on exactly what contract is there. Do they actually own that proprietary bit of the software? They may say they do, but do they really? So on and so forth. Real estate is different in the sense that you diligence the title, you diligence the building, the tech of the building, you diligence to figure out whether there's environmental damage there, so on and so forth. So you can go pretty deep without a lot of people giving you much info at all. But on the flip side, I think you probably need less experts to tell you whether a particular real estate is good or not. You can sort of figure a lot of that stuff out yourself. Whereas, look, if you're going to be going into, German cable or certain, industrial businesses, I'm not an engineer. Like I need help to figure that out. So I just think it's two different things. But in terms of diligencing something to the nth degree without a lot of help from the person you are buying from,
you can do that in real estate.
You can do that in real estate.
You can try and box off your risk, or you can kind of go into a deal with your eyes as wide open as they possibly can be in comparison to other sectors, which makes it easier to get your head around or really understand what you're actually going to be buying or entering into.
That's right. Yeah. So you're not really relying too much on the seller. You can do a lot of things independently.
Have you lent on mentors throughout your career?
Sorry, say that again.
Have you lent on mentors or kind of coaches?
Yes, I have. So I still have a performance coach until today. Otherwise, I think it'll be very difficult for me to do what I do. Or, I might be spinning around like a top. But there are certain people that I speak to. And a lot of it is not anything that's technical. It's more about the soft skills and understanding exactly what I should or should not be doing. It's never a technical thing. You sort of know what you want to do, but how you approach it is what helps me. I would say, the person that I rely on the most is my wife. She's probably the smartest person that I know, and I'm not saying that because we're on here or whatever, but I rely a lot on what she says in terms of the softer parts of how to approach something. And then I also have a performance coach. And then I do have one or two mentors that I speak to. But it's all, for that, it's much more about trying to just, lean on their wisdom a little bit because I don't have as much compared to them.
How do you manage 1,000,001 spinning plates and competing priorities without burning out?
So my calendar is pretty full. I think, I tend to block out times. I find that doing a lot of this sort of more thinking sort of work is much better for me to do in the morning. So I'm a very early riser. I'm up by like 5:30, 6 o'clock. I get a lot of stuff done. I also sleep fairly early. I'm probably asleep by like 9:30 or 10 o'clock if I can. Getting the right amount of sleep is very important, but then compartmentalizing, even if it's calendar blocks, just to make sure that you tick through and get everything done, everything's getting pushed. That's the most important thing. At this stage of what I do, there may be times where I am directly responsible for a work product of some kind, but that's quite rare. I'm normally managing some other person that's managing someone else. And so then project managing all of that as you go along is the more important thing to do. Because I think if you are doing each and every single thing yourself, you've lost. Your infrastructure is not quite working.
So you compartmentalize it, put some structure, put some process, and then kind of empower and enable other people to go and execute.
Yeah, always.
Building it in with accountability.
That's right. Otherwise, you won't have enough bandwidth. And then again, you got to, if you've built a good infrastructure / conveyor belt, you got to use it.
There's an ongoing theme that I'm sensing from you here. Yeah. As we look forward, what are the plans for Clear Sky in the UK and Europe in terms of maybe other sectors or, kind of building out the self-storage platform?
Yeah. So our immediate focus is self-storage. We've got a great team over here and we are built to grow. So we've got about 24 plus stores now. Obviously, we want to take that take that into multiples where we possibly can. So that's an element of course, identifying all the pipeline assets, making sure all of that works, and lots of capital raising. We will probably still focus on certain verticals and raise around that. The new verticals that we're looking at, and again, there's enough to attack with the self-storage angle. The other ones that we'll look at will be somewhat, living / logistics adjacent, which I guess self-storage is somewhat in between the two. But again, I think that's another theme that we'll continuously go for.
So kind of, ancillary kind of sectors that complement each other.
Yes.
Will be where future growth comes from. As we draw to a close, the question that I ask everyone who comes on the podcast is, if I gave you £500 million worth of capital, who are the people, what property, and which place would you look to deploy that capital?
That's an interesting one, isn't it? Well, that's a lot of capital in one go. Well, I would love to say self-storage on a pan-European basis with the great conveyor belt that we've got now.
Yeah?
Yep.
And if you didn't have that, which other sectors would you look to?
If we didn't have that, and we're talking more longer term over here, I would say logistics in certain submarkets in Poland, not big box. I'm talking like mid box, small box sort of stuff, where some of these things you're able to almost pre-let even before the steel frame comes up. That I think can do in a bit of size. Now, that in itself, by the way, is contrarian because a lot of investors will go, ooh, Central Europe, Poland sort of exposure. Is that the right thing to do? But it's never gone wrong. Like, I've done it for a little bit. That seems to go pretty well. And then otherwise, it's probably student accommodation, but not in a spot where you're not as reliant on foreign students. And that, by the way, could also be the UK, depending on which subsectors or submarkets you choose.
You've had an amazing background and kind of route into real estate. Thank you so much for joining me today, and I'm really excited to see what you and the team go on to do moving forward.
Appreciate it. Thanks for having me.
Thanks for listening to this week's episode of the People, Property, Place podcast. If you found it insightful, feel free to share it with a friend or colleague. Give us a rating, like, or comment. It helps tremendously. It'd be great to hear from you on LinkedIn. I'm super open-minded to recommendations of guests that we should have on the show or areas of the market we should explore further. So do drop me a message. The People, Property, Place podcast is powered by Rockborn. The team recruit leadership and future leadership hires for real estate owners, funds, investors, and developers. So if you're looking to hire top talent for your business, head over to the website www.rockborn.com, where you'll be able to find a wealth of information, or feel free to drop me a message on LinkedIn. Have a great day wherever you are, and I look forward to catching you next